If we can locate 4 to 6 very small boutique registered investment advisors like him, I would imagine we could probably 5x the amount of money we raise over the next 12 months compared to what we did last year. And that's exactly what we did.
Mm.
And what we have to realize is that in society, there are people that we can approach to leverage the relationships which they have with wealthy, affluent people. Those are the very small, boutique registered investment advisors, not the big behemoths that manage billions, but
Mm.
very small RIAs that might have 80, 100, $150 million under management. Then, of course, we have estate planning attorneys. Those people have a lot of very wealthy, affluent clients. And let's not forget, of course, the CPA firms. So, it's understanding if I can market to these people and integrate some of that into what I'm doing, yeah, it may take a little bit more time. But if I can finally get one relationship that can open the door to $5 to $10 million over the course of 6 to 12 months, is that not a win? And it doesn't take a lot of those types of relationships.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
Brad, welcome to the show. How you feeling today?
I'm doing great. It's great to be here, Peter.
Hey, I'm happy you're here. So let's get right into it. Let's start with an introduction. So Brad, who are you? What do you do? Why are you here? All that good stuff.
Sure. Yeah. My name is Brad Blazar, and I've been a professional capital raiser most of my career. Started when I was in my 20s. And today, what I tell people I do is I show other people how they can basically retire with passive income, acquiring things like businesses and real estate assets so they can have multiple streams of income. And the best part about it, Peter, is we get to do all that with other people's money.
Nice. Well, what brought you into this kind of space? I feel like you need a certain level of confidence, is a certain level of understanding, education, all that kind of stuff. What brought you into the space, and what's kept you there as long as you've been?
Yeah, so it's really an interesting past. I was going to school many years ago to become an architect. And while I was studying architecture, I just responded to a small ad in a local newspaper in Austin, Texas. And it was actually an oil company that was looking to hire somebody to come onto their team and solicit accredited investors to raise capital. And so at the age of 21, I was hired by the CEO of the company to go in between classes and after school. And they taught me basically how to build relationships with people, how to build trust. And here I was, the 21-year-old kid, basically reaching out to doctors, business owners, and entrepreneurs, raising capital. And after a couple of years of doing that, went off on my own, started my own oil company at the age of 23, raising millions of dollars and surrounding myself with a team of people, geologists, securities attorneys, CPAs. And as they say, the rest is history.
Anything that you were doing back in those days, in kind of building the foundation of capital raising, that has stuck with you, that you still continue to do today, or has it evolved a lot, or what's that look like?
Well, I mean, it's evolved a lot and it's certainly changed. Remember back then, we didn't have the ability to openly solicit investors like we do today. The solicitation rules really came about as a result of the Jobs Act in
Mm.
12, and then, of course, went into effect in 2015. So, we had to have somewhat of a pre-existing relationship with the investors. But back then, everything we were doing literally was pretty much over the telephone,
Mm.
or, calling people. We were, of course, hosting events, investor meetups, things of that nature. But as it relates to the structure of how I go through the process of building a relationship and building trust with people, that is exactly the same. Nothing has changed with regards to the way I approach others, what I say, and kind of how I move them forward through a process that I've created over the last 20 plus years that I call the 4-step blueprint in the trust sequence. Because the biggest mistake I see new capital raisers make is they'll have a deal or they'll have a fund or they'll have something they're working on, and they get in front of somebody with money and they start pitching.
Mm.
And of course, the other person will ask them to send the information, but they're really doing that more out of being polite, but they never invest. And the big mistake, of course, there is that you haven't spent enough time building a really solid foundation of trust. And what
Mm.
people have to realize, of course, Peter, is People invest with people they know, like, and trust, and trust is something that takes time to develop.
I love it. God, there's a lot to get into there. So let's break that down. Can we talk about the four-part structure you said, and like the building trust and all, and then from there, let's evolve that into taking it into real action and generating leads and getting talking to people on a daily basis and all that stuff. But let's start with what that structure is. Let's build that foundation first.
Sure. Yeah. So, back in the day, which was when I got started, and even today, I basically tell my students, people I coach and mentor, as well as myself, and raising capital for my own projects, you have to think about raising money and working with people as simply taking a prospect, putting them on a conveyor belt, and moving them forward in a process. Oh, there's going to be an introductory call. So what does that look like? Usually the introductory call, the first thing I do is I tell the other person, right now, I don't have any opportunities or anything that I can openly share with you. And I say that even if I do, I don't want them to know that I have something. I kind of hold them at a distance, and I give them the impression that right now I just don't have an investment opportunity. And so, after asking questions about their investment acumen and their time horizon and, maybe the best investment they've ever made or what they look for, tolerance to risk, I mean, I really want to know that other person. I usually follow up by just sending them something very generic. It might be something like a one-page introduction on my company, or a link to my website, or a link to a podcast, just to add some more credibility. And then I schedule a follow-up call with them, usually about 7 to 10 days later. That follow-up call is just really another touch. It's to make sure they got the information, ask more questions, go deeper with that person. And usually what I do between the first and second call is I send something via email. And what I've learned in the sales process is we have to think about this. It's called linear and nonlinear.
Mm.
Linear means we're talking, or we're, meeting in person, but a nonlinear touch in the sales process is, what can I do to stay relevant in the mind of another person? So between my first and my second call, what I might do, Peter, is I might send you an email and say, hey, Peter, I ran across this interesting article that reminded me of the conversation we had a couple of days ago. Thought you might find it of interest as well. It just adds value. But at the end of my second call, I'm doing something very important. And what I'm trying to do at the end of my second call is I'm trying to verify that you trust me enough to move forward in the process with me. Because if you don't, I'm just wasting my time. And so I've created something that I call the validation phrase. And it goes something like this: Peter, I've really enjoyed getting to know you. But like I said, right now, I just don't have an opportunity that I can openly share. The reason is I have pre-existing investor relationships, and I like to give those people the right of first refusal on most of my new deals. But here's what I'd love to do, Peter. I keep a list of people on my desk that have expressed interest, and I'd love to just add you to that list and get back in touch with you at a point in the future when I think I have something you can get really excited about. Would that be okay with you?
Sure.
And when you say yes, what you're doing at a very subconscious level is you're acknowledging that you trust me, and you're ready to now move forward to the next step. And the beauty is that the next time I call you, when I'm sharing an opportunity, it's because you asked me to. You see? And that's really where the magic happens in raising capital. Is we never sell, we never chase, we never come across from a place of persistence or desperation. I'm calling you because you invited me to. And so now on that third call, what I'm doing is I'm sharing an opportunity. And now I'm sending you everything to take a look at and conduct your due diligence, and then scheduling a call about 5 to 7 days later to do what? Answer your questions and explore what the next steps might look like for you. Usually that's coming on board, hopefully. Usually that's wiring proceeds to become a partner. And so when you think about the approach, it's typically 4 or maybe 5 calls or meetings over the course of about a month to move somebody forward from being a potential investor to actually becoming a investment partner.
Nice. Wow, that sounds like a very smooth kind of assembly line, like you said, kind of process there. What are some of the common hurdles you get, you know what I mean? Or how would you normally face something where maybe somebody doesn't have the time, or they push something off, or they miss a meeting, or all that kind of stuff? You know what I mean? Is it, do you just kind of say, all right, the timing isn't right, and then maybe put them on like a tickler kind of a system, or, what is, and maybe it's better to say, or what percentage would you say go through that process seamlessly, in the sense of, like you said, you have that first touch, and then 10 days later, you have that next call, and then they show up to it, and they talk to you, and then they say, yeah, I want to see more, see your deals, that kind of thing. What percentage would you say go through that process? And then for the people that don't, what do you do about that?
Well, you have to realize, depending on, the exemption that you've selected, whether it's a Reg D 506B or a C, as
Mhm.
you're talking to people, trying to figure out whether they're accredited or non-accredited. Certainly if you're doing a 506C, which a lot of us do, so we can advertise and solicit and host webinars and use social media.
Mhm.
The people that are non-accredited, that just don't qualify financially, we don't discount them. We don't say goodbye. I realize that just because you're not accredited today doesn't mean you might not be accredited at the end of the year.
Sure.
People's worth do increase. There might be an inheritance. They might sell an asset. So we have a very, very established drip campaign in place
Mhm.
where consistently are dripping on people to keep ourselves relevant and in front of them. Those that do qualify, we're naturally moving them forward. But there'll always be reasons that people don't invest. It could be timing. It could be that they've made another investment recently and they're just waiting to see how that pans out. But one of the things that I've learned is there's never going to be a right time. I just tell people, look, if you're trying to sit on the sidelines and quote time the market,
Yeah.
there's never going to be a right time. We all know that every industry is cyclical. We know that the stock market is cyclical. We know real estate's cyclical, but we're talking about real estate here. And as you and I know, real estate tends to trend upwards over time. Why not get in now? You're going to get your first distribution check next quarter. Those are going to continue on a quarterly basis. So if you want to sit on the sidelines and basically not participate with us, you're missing out on a great opportunity to receive quarterly income and, more importantly, the tax benefits
Mm.
are
Sure.
also associated with what we're doing. And so I think a lot of it really comes to just also educating people. A lot of, accredited investors are not as educated perhaps on investing. And I think that really being a great capital raiser also comes down to being a really, really good educator, explaining to them how investments work, why they should diversify, and asking questions as it relates to what's important to you, Peter. Are you looking for income? Are you looking for capital appreciation? Or are you
Mhm.
looking for tax benefits? You see, a really good capital raiser hopefully has understand and studied the sales process.
Yeah.
What I'm trying to find out as I'm talking to you and what I'm trying to uncover is what the temptation is that will motivate you to invest.
Mm.
Everybody has a need for their money to be doing something.
Mm.
And one of the things that I've learned is money will always exchange hands, always when problems are solved. And so,
Mm.
to the extent I can find out what your problem is and then match the benefits of my investment to your problem, there is a much greater preponderance of you actually now investing with me. So, as an example, if I was talking to you and in the first or second conversation, I found out that maybe you had one or two kids that you were trying to put through college in 4 to 6 years, when I'm now pitching my opportunity, I might say something like, Peter, can you see how the appreciation in this piece of real estate is going to help you put those kids through school in the next 4 to 6 years? And as I
Mhm.
shake my head, what are you doing? You're nodding your
Yeah.
head as
Yeah.
well. Now it's much easier for you to move forward because you see that what I'm proposing is going to help you solve a problem.
Yeah.
Or, it might be that maybe you're a surgeon and your biggest problem is taxes. And
Yeah.
I pick up on that. Now I'm talking about the tax benefits to help reduce your taxes. And so again, you're nodding your head and saying, yeah, I see how that's going to help me. So I always try to uncover the temptation that will motivate an investor to move forward and take an action, because the thing that I want to avoid is indecision.
Mhm. Mhm. Yeah, no, I think that's a really good point, and I think there's something to be said for that too, because I think it shows that you care. There's different ways to look at that. Like, I think somebody could listen to that and say, "Oh, well, it's I don't want to use the word manipulative, but it's a sales tactic, or right, or something like that." But I think too, there's a point there. It shows that you care and that you're trying to personalize the investment. You're trying to better understand, because I'm sure there's times where it doesn't necessarily match, people's, what their goals or something like that. I've talked to a lot of investors where they say they want cash flow or something like that, and then they'll end up telling me, I got into this development play or something like that, where they might not see cash flow for years. Now, and there could be a point there where it's going to be refi, they're going to continue to own percentage and have
Right.
cash flow for life. So it could be a timing thing in that perspective. But I think those questions in the conversation, if you're raising capital and you're thinking, prying too much, or what are they and there's a different perspective there, and you think you hit the nail on the head, where personalizing the message and kind of the pitch and the education too. That's one thing that 10 years of raising money, I'm still like, you really have to be an educator. It's just, and I didn't sign up for that, but it's one of those things where it's just a part of the business, right? You know what I mean? Is there when did you pick up on that, and how have you been able to put that into your day-to-day life and all that kind of stuff?
Well, I mean, I don't think it's really something I quote picked up on. I think it's just being in the investment community, working in the industry, raising literally hundreds of millions of dollars, talking to people. I just started seeing patterns, and I
Hmm.
started realizing that, those that did understood investments better than those that did not.
Yeah.
So one of the things that I talk about with a potential investor is this theory of investing called the endowment theory. And if you Google this, the endowment theory is basically a theory of investment where you look at the largest endowments, the major universities like Harvard or Yale, and you look at their investment portfolio. And what you start to realize is that they're investing in many different asset classes, things like natural resources, the stocks, equities, but they're not only investing in stocks in the US, they're investing in global equities,
Mm.
companies that are based in other countries. They're investing in things like private equity. They're investing in precious metals. And of course, why are they doing this? It's because they realize if they have all their eggs in one basket, they're going to have a very, very erratic ride as the stock market goes in and out of cycles, or as real estate goes in and out of cycles. And so
Mm.
by being very well diversified, they're getting just steady, very predictable growth pretty much year over year without the bumps or without the dramatic declines. And I talk to
Mhm.
a lot of investors that think they're diversified or they're in the stock market and they say, oh, yeah, I'm very diversified. I'm in the stock market. I own about 10 different stocks, Facebook, Amazon. I got some Apple and Nvidia and yada, yada, yada. And I own some real estate investment trust. They think that the
Mm.
exposure to real estate through real estate investment trust is going to give them diversification. But what they fail to realize is there's tremendous correlation with that. If the market tanks, those real estate investment trusts, I guarantee they're going to decline as well.
Sure.
That's why you need to have some private real estate that is non-correlated.
Hmm.
And so we start talking about, really how to diversify. And they thank me for that because after they actually take action, they see much greater predictability and they
Mm.
see much reduced volatility in their investment portfolio. And that's really what I'm trying to do is show people how to dramatically reduce the volatility in their investments so they can sleep well at night.
I like it. Okay, so we kind of went through the process there, of building trust and going from, the first kind of meeting and then everything along the way to an investment. Now talk to me about, I think one of the things people struggle with a lot of is getting the leads. You know what I mean? Finding people to talk to. Where do they find them? It's always the classic, family and friends, and then So let's talk about kind of the foundational places to go, or places to hang out where you're going to generate consistent leads, and then let's take that to maybe some other kind of strategies that maybe we're not thinking about, that kind of thing.
Well, number one is you can buy a list of leads. I mean, if any of your listeners want a list of high net worth accredited investors, just reach out to me and I can deliver a list of leads to any one of your listeners with names, emails, telephone numbers, mailing addresses that show that people are accredited investors, their age, how much they make. And then it's just a matter of figuring out how you want to reach out to those people. You want to call them, you want to email them, you want to invite them to a investor meetup. So, you can physically buy a list of high net worth accredited investors. Another great way to meet people, which is kind of thinking outside the box, and I've actually written an article about this. If you go to my LinkedIn profile under my articles, you'll see an article there called The Best Idea You've Never Heard of Before. But when I was raising capital and doing it by leveraging the help of financial advisory firms, there was a brand new advisor that was really struggling. And I said to him, "Hey, I think I've got an idea that could truly help you. Now, I've never done this before, but if it works, it's going to make you an absolute rock star." I said, "Here where you live, what is the most affluent, wealthiest part of town?" And he said, "Oh, well, that's pretty simple. It'd be probably over in Highland Park by the Dallas Country Club, And I said, "Great. That's the part of town where you've got all the 10 and $20 million mansions." He said, "Yeah." I said, "Is there a Starbucks or a coffee shop there?" And there was a pause. He said, "Yeah." And I said, "Why don't we meet there on Monday morning?" And so literally, here we are hanging out at Starbucks, and what do you think's happening? We're seeing Bentleys and Porsches and Range Rovers and Mercedes pull up. And I just said, "Hey, what we're going to do is we're going to tell the barista that we're going to pay for everybody's lattes and coffees." And so we went up there and gave the lady my credit card. Everybody that walked in there, whatever they ordered, the lady behind the counter just said, "Oh, it's absolutely free today. It's compliments of the two gentlemen sitting right over there." We got CEOs, we got partners in law firms, we got surgeons making $900,000 a year. Business owners coming up to us going, "What's going on? Am I like on Candy Camera?" And we said, "No." And we just introduced ourselves and said, "We really take offense when people call us in the evening, which we consider our family time." And so we brought a much easier approach to introduce ourselves or treat you to a cup of coffee on the way to the office. We walked out of there with contact information for some of the most wealthiest, affluent people in town. Now, here's the thing. Is that getting outside your comfort zone? Yeah. A lot of people are not willing to do that, but does it work? Absolutely, 100%. If you want to meet some of the richest people in your community, that is the way to do it. Another great idea is in any larger city, there are going to be investor meetups. And so I tell people, just go to Google and just put investment clubs in the city you're in, and boom, you're going to get a whole list of the RIAs, which are the real estate investment groups. You might get groups that are meeting and talk about the stock market. You might get groups that are talking about crypto or groups that are talking about business acquisition. So what? Go to these meetings, because by definition, everybody in the room is an investor. And once they know what you do, there might be an interest on their part to have a breakfast or have a lunch, because most people are smart enough to understand the importance of diversification, right? And so there's plenty of ways to build your investor traffic and start building your database. The thing that you have to realize is the only way that you're going to be able to do that is by taking action.
Sure.
Fortunately, a lot of people settle to a place of complacency, which means they've accepted mediocrity. Therefore, they're not willing to do the things that are going to make them a huge success. But if you guys just show up every day and start becoming aware of the opportunities around you to meet very affluent, wealthy people, that's how we do it.
Yeah, I love that. It made me think. I don't know if you know the kid on. I know he's probably not a kid. He's a little older than that, but on YouTube where he interviews, people, with massive net worths and business owners and things like that. And I think he just goes to, where they hang out. I mean, the restaurants, the retail stores, the country clubs, the hotels. Places where affluent people would find themselves buying something, shopping for something, going somewhere, and ask for an interview, that kind of thing. So it's just putting yourself in that place. I love that. That's like you said, you have to think a little differently, and you have to be willing to do things that other people aren't willing to do. And how many of us can say that, right? But that's awesome. What are some of like the advanced strategies? So for somebody who's gone beyond, who's has a track record now, I mean, they've kind of, they do the stuff in the local area, like you said, they have the meetup, maybe they have their own meetup, all that kind of stuff. Is there any kind of advanced strategies that you would say, okay, once you've gotten to this level here, you can move up beyond and go into this world here?
Yeah, no, absolutely. The big game changer after you've had some success and, you've got a little bit of a track record is to understand this concept called marketing to the one to get to the masses.
Mm,
When I was in the oil business, I was doing it like most people. It was grudgery, it was hard work, it was a bitch, but it worked. We were picking up checks for 25,000, 50,000, and we were able to aggregate all that money and raise millions of dollars. And one day, a friend of mine that was a very small boutique registered investment advisor called me and said, hey, Brad, I've been watching you from the sidelines. And I think what you're doing is very suitable for many of the clients whose money we manage. And I said, great. And so we got together, and over the course of a couple weeks, he conducted what we call due diligence, which is vetting me and my firm as a sponsor. And, once there was a place of comfort where he realized we had all of the components in place and that he could trust us as a fiduciary, he and I proposed doing a get together where he was going to do most all of the work. He would get 12 to 20 of his better clients together. I would come in and I would basically, buy some wine and some appetizers and hors d'oeuvres to make it a very nice, elegant event. And, I just basically presented the opportunity, kind of went through our pitch deck, who we were, what we did. And then again, he did all the work. He met with each family, figured out how much they wanted to invest. And lo and behold, in about 2 weeks, he sent me $2.5 million.
mm, wow.
Little light bulb went off. I'm like, why am I over
That
here
again.
fishing
Yeah.
for little minnows when
Yeah.
I'm over here just landed a blue marlin? And so I got my sales team together and I said, hey guys, if we can locate 4 to 6 very small boutique registered investment advisors like him,
Mm,
I would imagine we could probably 5x the amount of money we raised over the next 12 months compared to what we did last year. And that's exactly what we did.
mm,
And what we have to realize is that in society, there are people that we can approach to leverage the relationships which they have with wealthy, affluent people. Those are the very small, boutique registered investment advisors, not the big behemoths that manage billions, but
mm,
very small RIAs that might have 80, 100, $150 million under management. Then, of course, we have estate planning attorneys. Those people have a lot of very wealthy, affluent clients. And let's not forget, of course, the CPA firms. So, it's understanding if I can market to these people and integrate some of that into what I'm doing, yeah, it may take a little bit more time. But if I can finally get one relationship that can open the door to 5 to 10 million dollars over the course of 6 to 12 months, is that
mm,
not a win? And it doesn't take a lot of those types of relationships. What I
mm,
keep telling people is, look, I was hired as the head of capital markets to raise capital for a couple of companies that were absolute startups. That
mm,
means we had no track record.
mm.
We had no prior performance, but all we did is market to these types of relationships. And in each instance, not once, but twice, we raised well over $100 million in the
Wow.
first year. And it was
Wow.
just me and typically just one or two other people.
Mm,
So, it's not like I had a huge army. It was just me and somebody else, or me or one or two people, but we were focusing our efforts on these very small boutique RIAs.
mm.
So, for the people out there that have a huge capital need that need to raise 25 or $50 million in the next year, you ain't going to do it picking up the phone, calling accredited investors, getting
Sure.
checks for 25 or $50,000. Good luck. It ain't going to happen.
Mm,
But can it happen? Absolutely, 100%. But what you've got to realize is now it's family offices.
mm,
Now it's boutique registered investment advisory firms to leverage those relationships, and then raising 25, 50, $100 million is very realistic and in the realm of possibility. How
mm,
do I know that? Because I've done it more than once. And if I
mm.
can do it and show others how to do it that are in my community, you can do it too. It's just a matter of understanding some of these more advanced principles.
Yeah. Well, it's interesting too, because I was thinking, in my mind, you had to do this first, and then graduate to that level or something like that. But you were saying, some of these firms were startups, so they didn't have that fancy track record or audited this and that, or, whatever you want, whoever that, you're thinking, yeah, whatever you're thinking they need to see. So talk to me about that. What does that process look like? I'm assuming you got to have a really good strategy, a good team put together, all that kind of stuff. Does what we were talking about before with kind of the four, the four blueprint, pieces, with the introductory call, the next call 7 to 10 days later, the touches with, through email in between and all. Does it work the same way with approaching that type of clientele, or is there some nuance to that, or some things that you would tweak, or what does that look like?
Yeah, it's largely the same, Peter. You need to slow down the process. You really need to build the trust. You need to create the relationship. You really get to know the other person, give them a chance to really know you. But it's really, about building a team and taking the optics off the fact that you might be a new company or you might be somewhat of a startup. When you build a team, you're not a wantrepreneur, you're an entrepreneur. And you can now say, the collective experience of the team that we've assembled exceeds 75 or exceeds 100 years. We've got, Peter Neal over here, who's a partner at XYZ law firm. He's going to dot the I's, cross the T's. I got Johnny over here, who's a partner in an accounting firm that's going to make sure that at the end of the year, you get your tax reporting information over here. We got so and so, he's an expert in underwriting or locating. And so to any investor, what they see is they see a collective experience in a team that can bring much greater certainty to the outcome. And one thing that I will share with your listeners, which is really key, when I had Kevin Harrington from Shark Tank come and speak to my community a while ago, he made a very, very wise statement that everybody really kind of honed in on. He said, for those of you that have watched our show, which is pretty much everybody, we all know that a lot of very smart people come on to Shark Tank. A lot of PhDs, a lot of very, very bright people, and they've got, good ideas, but they don't get a deal. Why is that? He said, it comes down to just one word. It's the ability to execute. See, if I don't believe you can execute
Sure.
on whatever it is you're trying to do, well, why would I invest?
Yeah.
But the greater you can convince me on your ability or the ability of you and your team to execute, then
Yeah.
I'm much more willing and much more desirous to move forward with you. And so it all comes down to that, showing somebody that you can deliver and execute on the strategy, whatever it might be that you're trying to do. And so with that in mind, that's how we were able to raise all that money. It wasn't just me and one other person. It was me, the CEO, the team, the collective experience of our partners and people that we could point to. And investors felt a tremendous amount of comfort. And same thing here. That's why a lot of times for capital raisers, we seek out what? Co-general partners, key principals, KPs, other LPs, and we're able to leverage and actually borrow somebody else's track record. I tell people, look, if you're just getting started, that's great. Borrow somebody's track record, bring them onto your team and point to their track record and say, hey, we got a person over here that's done 15 deals and has $100 million in AUM. They're an advisor to our fund or to our deal. They're helping us raise capital. We've assigned them certain responsibilities as a co-GP because we can't just allow them to raise capital and leave it at that. We have to give them other duties and responsibilities. But that's how we raise a lot of money. And I think that's how the listeners here can grow their capital raising to another level, just being cognizant of some of these opportunities and really just starting the process. I think so many people kind of create these limiting beliefs for themselves.
Sure.
And just say, well, that's not going to work. And so they never even try.
Yeah.
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 They never even pick up the phone. They never even go to an investor meetup. They never get in the right rooms. I go to about 30 events annually that just do one thing. They bring family offices and rich, wealthy people together. And I go there to show up and network and meet people. And I've met some amazing people like Nicole Buffett. That's a granddaughter to Warren Buffett, one of the best investors on the planet. Trammell Crow. He's the founder for Crow Holdings, a guy by the name of Lorenzo de' Medici, who was an ancestor to the Medici family in Rome, Italy, where his great-great-grandfather was Pope Leo X. And so by getting in these right rooms and building these contacts, I'm now able to leverage those relationships because remember this, everybody, you're one contact away from changing your life. And that's a very, very powerful concept, but I've used it to literally raise hundreds of millions of dollars and change the lives of lots of people. People in my Rolodex, like Matt Knowles, that's Beyonce's dad. He's a good
Mm,
friend of mine. Obviously, Kevin Harrington. The stages I speak on, I'm now connected to everybody through the green room behind stage. Jordan Belfort, Kevin O'Leary, Floyd Mayweather. And so if I need something, it's reaching out through them to
sure.
get connected to their network.
Yeah, yeah. Network is everything. I love what you're saying there. Very,
The network is your net worth.
yeah, exactly, exactly. That's a phrase you can never hear enough. It really needs to sink in, and yeah, I think it's such like everything you said. It's inspirational, and I think the limiting belief thing is such a big thing. And one other question I was going to ask you in that line was everything you were saying about finding, accredited investors, retail investors, individual investors, a lot of those concepts from like, purchasing list and going down that route or going to networking events and things like that really operates the same way in that world you're speaking of too. You can buy a list from, and find, RIAs and investment advisors and things like that, family offices. And then there's events and networking groups, like you said, where they're hanging out and they're going to as well. So there's a lot of crossover, and it's kind of just comes down to where do you want to spend your time and and your energy and your efforts and all that, right?
Absolutely, 100%. You bet.
So a couple other questions for you. One of them being, how personally for you, what's your thoughts on like the thought leadership platform and all? I had a boss years ago who he told me, I mean, the best way to raise capital is to teach raising capital, and I see you doing that in real life. Have you felt that has helped a lot over the years with kind of building that authority, thought leadership platform? And would you advise others to teach or to teach raising capital if they know that business, or to teach other things? Like what do you think about that thought leadership platform? I'm assuming that's something near and dear to you that's helped you a lot, right?
I don't think that quote you have to teach per se, Peter. I just decided to do this because it evolved over time, really through consulting. But what I do believe 100% is that you have to build what I call your reputational capital.
Mm,
I created this concept called reputational capital to real capital. It's how you become a person of interest, how you create credibility, how you build a reputation, how you build a brand. And by doing this, you can then basically convert that to the raising of real capital. It's much easier when people see you
hmm
or read about you, where they're reaching out to you rather than you reaching out to them. So, imagine that you understand this concept, reputational capital to real capital. Maybe you start a podcast, or maybe you write a book, or you create an ebook or something. And now people are experiencing that, and they're calling you or your office and they're saying, "Hey, I heard you speak on Peter Neal's podcast. I want to know more about your fund." Or, "Hey, I picked up your book the other day and I'd like to learn more about your fund." Now they're pursuing me. I'm
hmm
not chasing or pursuing them. So I do believe that in raising capital, understanding this concept, reputational capital to real capital, is a very, very important concept. And we're actually doing a workshop on that in May in Nashville, Tennessee, for anybody that would like information on that. So, I think that the more you understand what you're really good at, and the better capable you are of articulating that where it solves a problem, or you can deliver that message to others, that naturally is just going to do one thing, and that is it's going to attract people to you.
mm,
And so the coaching or the mentoring, certainly that does add an element to what I do, but I really don't utilize that to quote, raise and attract capital. I just do it
mm.
because I'm really, really good at it. And I believe that it's a skill that most business owners, most entrepreneurs out in the world really need to understand and master.
Yeah. Yeah, that makes a lot of sense. Curious, what are you investing in? What do you like from that perspective? Right, it sounds like you did a lot of oil and gas. I don't know if you still do, but curious to what the investment side of your world looks like and how you go about that, finding deals and things like that as well.
Yeah, no, like I said earlier, very diversified. I kind of subscribe personally to that endowment model. So,
Hmm
I'm active in the crypto space. I look at crypto as just another asset class. Obviously real estate, very active there. Obviously the stock market, very active there. I also do invest in collectibles like art and wines and things of that nature. But as it relates to my fund in what I'm actually actively raising capital for, because we do have an active fund, we invest in basically multi-tenant cash flowing commercial properties. So
Mm,
rather than just, boxing ourselves into one sector and saying, hey, all we do is multifamily, we haven't limited ourselves. It's
mhm,
basically multi-tenant. So that could be multifamily, it could be self-storage,
mhm,
it could be mixed use industrial, but where there's multiple streams of cash flow,
mm,
those are the types of investments that we really gravitate to and that I like because I realize that it's really the cash flow that allows you to build wealth in addition, of course, to the portfolio itself. But I talk to so many people that say, oh, I want to get to a net worth of $3 million. And I'm like, great, having a net worth of $3 million isn't going to pay your bills, isn't going to pay your mortgage, isn't going
yeah,
to allow
you
you to put
can't eat
food
the
on the
equity, right?
yeah. So, what does that look like if we take that money and we invest it in something that maybe now is yielding 7 or 8%? Okay, now you've got 200,000,
Mm,
$240,000 a year coming in. Most people can live very comfortably on $15,000, $20,000 a month in passive income. So I try to explain to people, let's figure out what it is you need first to move in the direction of financial independence. If that's five, $6,000 a month, okay, what can we do to get you to that?
mm.
Once we get you there, then we can focus on the other things, which is building more income and actually building your assets under management.
Yeah, that makes a lot of sense. Well, Brad, this has been an amazing conversation. Really appreciate you coming here and talking to me and sharing the knowledge and just what's possible. You think you definitely left some gold nuggets here and some mind shift kind of information. So for somebody that wants to learn more about what you do from a capital raising side, if they want to get involved with you that way, and then maybe your funds as well and that kind of stuff, talk to us about how we can get in touch with you.
Yeah, so I'm very simple to follow. I'm pretty much all over the internet. If you just Google my name, Brad Blazar, it's Blazar. There are no E's in the spelling of the name. You'll see my website, just, www.bradblazar.com. Reach out to me through my contact page. Follow me on Instagram. I'm the guy with the little blue check. Send me a DM. And typically we respond within 48 hours. So you can learn more about our coaching, our mentoring. As it relates to our fund, the fund is Crescendo Capital Group. And so you can go to our website, Crescendo Capital Group, LLC.com, and learn a little bit about what we do and take a look at some of the affiliate transactions we've been a part of. We'd love to talk to you about possibly partnering with us. We're always looking for co-GPs, always looking for investors. And, like I tell people, if you want the benefits of real estate and you want all the things that real estate provides, but you want it without the tenants, toilets, and trash,
Mm,
let us, the experts, do that heavy lifting and do the work for you.
great. Well, Brad, I appreciate your time. Thank you so much for being here.
Absolutely. I've enjoyed it very much, Peter. Thank you. Anytime you want to have me back, I'm more than happy to say yes.
Awesome. Awesome. Thank you so much, Brad.